Hi traders, today's video is discover why you must use multiple exit strategies when trading Forex. And in today's video we're going to cover the following topics, and they are different types of markets, uptrend, downtrend, consolidation, risk to reward target, trading stop target, and support or resistance target. Now stay with me to the end of this video as I have some great exit strategies to share with you, and I'm sure that you'll want to add them to your trading plan. Introducing myself, my name is Duncan Cooper. I'm a full-time trader and the Senior Market Strategist and Trading Mentor at ACY Securities. Okay, so let's get into the first topic. And let's discuss different types of markets. So it's important to understand that there are two different types of markets. So you may need a different exit strategy for each. And the different types of markets are trending, which consists of uptrend and downtrend, and consolidation, which is neither an uptrend or a downtrend. Now, as these are different markets, you'll probably need to adjust your exit strategy to accommodate both. So first, let's quickly run through what an uptrend, downtrend, and consolidation markets look like, and then we'll get into the exit strategies. So an uptrend is when price is making high highs and higher lows. And an uptrend starts when price breaks above the last lower high. So price comes up, breaks above the last lower high, that's when the uptrend starts, puts in a higher high, then it'll pull back and put in the first higher low, and then further advance, putting in another higher high, pulling back to put in another higher low, and so on. So that's what an uptrend looks like. And a downtrend is the exact opposite to an uptrend. A downtrend is when price is making lower highs and lower lows. And a downtrend starts when price breaks below the last higher low. So price finds some resistance, moves down, breaks below the last higher low, puts in a lower low, then comes up and rallies, puts in the first lower high, then moves down to put in a further lower low, and then has another rally, puts in a further lower high, and then further moves down and continues the downtrend. Okay, so that's what a downtrend looks like. Now when we're dealing with an uptrend or a downtrend, we're expecting that the trend will continue. So there's the opportunity to make further profits as the market continually moves up or down. So let's now go through what consolidation is. Consolidation is when price is making equal highs and equal lows. You can either have an uptrend or a downtrend. Price is held at support or resistance, and your potential to make profit is just within the consolidation range. So price is being held at resistance up here, moves back down to support, support holds, price comes all the way back up to resistance, then back down to support, all the way back up to resistance, and then again back down to support. It's important to understand that 60% of the time price action is in some form of consolidation on the weekly, daily or 4-hour charts. Now trending markets have the potential to offer more profit, whereas consolidation markets only have the potential to offer profit between the support and resistance range. So you will need to employ different exit strategies when dealing with these two different markets. Okay, let's get into the first exit strategy, which is using a risk to reward target and works best in trending markets. Can be used in a consolidation market when trading within a large consolidation range. Now I will discuss an uptrend example, but simply do the reverse in a downtrend. So let's get straight into the charts. Hi traders, let's go through the risk to reward exit strategy. So here I'm on the day chart of the dollar Canadian, and for a while through this area here we're in consolidation, but then on this candle we broke above a high point here, so we broke above a lower high, changed in trend to up, and we got a clear close above the consolidation level. So for me that would be a buy trigger. So as you can see here, I've marked that as an entry. So the entry is just here. And what I would be doing is putting my stop loss below the last swing point low, or the last lower low here. And in this example, that risk is approximately 150 pips. So what I've done is I'm measuring a risk reward target of 1 to 2 above. So I'm targeting up here 300 pips. So what I like to do is make the most of the trend and try and get a good risk reward target achieved. So I'm risking 150 pips. As price goes up, when I achieve 150, which is here, I like to get the risk out of the trade, so I'm at a break-even perspective, and then allow price just to continue up with the trend and ideally meet my target. So my exit strategy is to have a risk reward target of 1 to 2. I use a limit order to exit and just allow price to unfold with the trend and let the trend take me out. Now this approach will work just as well on a 4-hour chart, a 1-hour chart or a 15-minute chart, as long as you have a good trend unfolding. Okay, so that's my risk to reward exit strategy. And the second exit strategy is using a trailing stop, which works best in a trending market. And again, I'll discuss an uptrend example, but simply do the reverse in a downtrend. So let's get to the charts again. Okay traders, I'm going to take you through now my stop loss target exit strategy. So we have an uptrend just starting to form here. This is a dollar Canadian day chart again. Price breaks above the last lower high just here. So I've referenced here my entry. That's my entry point. My stop goes below the last bottom. In this case it's a higher low just formed here. So my stop loss goes underneath here. Alright, I'm probably risking around about 100 pips on this trade. And what I like to do as the trend is unfolding, so price has moved up into an uptrend here, it's pulling back, it's moving up, it's pulling back, and moving up, pulling back, further moving up, pulling back, and moving up, before then the market pulls back and changes the trend. So what I like to do, just going to change my color. Here we go. So as price is moving up, so it's moving up here and it's putting in a higher low, I like to move my stop from where it starts here. So I'll just change the color to red here, there's my stop. As we're putting in a higher low, I like to put my stop just underneath, 1 pip underneath. As a new higher low is formed, I progress my stop and I just continue doing that. As price moves up and forms a new higher low, I'm progressing my stop underneath here. And sooner or later the trend will change. So as it puts a top in here, it pulls back, breaks the higher low here, hits my stop and takes me out. So this is my exit point for the trade. This exit strategy will also work well on the 4-hour, 1-hour and 15-minute charts when you have a strong trend unfolding. So there you have my stop loss target exit strategy. The third exit strategy is using a support or resistance target, best used in a consolidation range. Hi traders, let's run through the support or resistance exit strategy. So I've drawn in a consolidatory range here on the 4-hour chart on the euro dollar. And what I see is that price moves down from resistance down to support here. Okay. Now in terms of getting into a trade, what I like to do is get in within the first 10% of price actually moving up from support. So I'm either buying at support or as it's just turning around. I like to get in within the first 10%. Now my exit strategy is to exit at resistance up here. So I set a limit order at resistance to exit. Now of course price might not get to the resistance level and exit at my limit order, but as price is coming up and it's getting in within the last 10% of the range, I'll monitor price action. If it can't get to my limit order target, I just do the best I can and exit automatically by just clicking out. Okay. Up here we can see that price does fail a little bit short of resistance, but it's still consolidatory, so it fails up here within the last 10% of the range and it starts to turn around. So I would be looking for an opportunity to sell here. So when I'm looking to sell within the first 10% of the decline. Price comes down and my exit strategy would be to limit out using limit order at support. Okay, now I know it comes here within the last 10%, so I'm trying to exit using a limit order to exit on support, but I will again monitor this area, the last 10% of the market, as it's moving down to the bottom of the range. If I start to see price fail here, I'll just click out and exit. Okay, so in this example at the bottom, it did meet the support level, so I would have exited, but prior to then I may have gotten worried just through this area here and clicked out of the trade. All right, again we come down to support. If I'm going to be trading at support in the consolidated range, I like to get in within the first 10%. So hopefully I had an opportunity to get in here. Price starts to trade up, so my exit strategy again would be to limit out at resistance. I would have a limit order set at the resistance level, and in this example here it comes straight up and would exit my trade. Alright, so that's my support or resistance exit strategy. I'm trying to limit out at support or resistance, but I'm monitoring my exit within the last 10% of the distance to support or resistance, so that I can make sure that I make a good profit on the trade. Okay traders, now you could use this strategy on the daily chart or the 1 hour chart if the range is large enough. Okay, so that's my support or resistance exit strategy. Okay traders, thanks for watching, and I look forward to seeing you in the next video. Now if you're interested in improving your trading, why not join me in my free beginner webinar series? You can register by using the link in the description below. All those that attend the webinars get full access to my own MT4 chart layouts and indicators. Okay traders, thanks for watching, and I look forward to seeing you in the next video.